Good morning, all. Welcome to the SBI Securities Daily Morning Podcast. Today, we will cover global market updates, key corporate development, along with second quarter result updates, key economic event to track, key actionable based on fund flow activity, and trading and investment strategy for next few days. Let us check what happened yesterday in the Indian market. Yesterday, Indian market opened gap down, mimicking the global market. However, recovered a bit in second half of the day. Relatively, Indian market seems to be more resilient despite negative news flow from the global liquidity market. Yesterday, Sensex declined by 0.4% to end at 65,629 levels, whereas Nifty dropped 0.3% to settle at 19,624 levels. Among the key sectoral gainers yesterday were consumption, auto, mid-cap ID. So stock specific action we are seeing post Nestle result. Nestle was up by 4%. Bajaj Auto day before yesterday reported stellar set of numbers. Bajaj Auto was up by 6% in the trade yesterday, and mid-cap ID companies like LTI, Mindtree, and Coforge were in green. In terms of laggards, yesterday metals, pharma, and real estate sector were in pressure. Broader market indices were outperforming the key benchmark indices, with Nifty Midcap 100 closing flat yesterday and Small Cap 100 was up by 0.2%. In terms of market breadth, it was kind of neutral with equal gainers and losers at approximately 1800 stocks. So 1800 stocks were in green and the same number were in red yesterday. Let us check what happened in the global market yesterday evening. So US market, Dow Jones, Nasdaq and S&P were down to the tune of 1%. Tesla closed down. Tesla was down 9% in the trade yesterday post the weaker set of numbers. The main reason for correction in US stock market was the speech of US Federal Chair Jerome Powell, wherein he said that inflation is still too high and would like to require lower economic growth. And this led to the spurt in the US 10-year Treasury yield to cross the 5% first time in the last 16 to 17 years. On the top of that, favorable US jobless claims came in at 198,000 number for the week ended October 14. This was well below a Dow Jones estimate of street estimate of 210,000 number, and this again indicate that US economy is pretty resilient despite of high interest rate. Kindly note that the next US Fed meeting is scheduled on 1st of November, and the street will be keenly eyeing the outcome of that meeting. Brent crude continue to scale up, and we have seen yesterday Brent crude crossing levels of $93 per barrel. US dollar index is trading at 106 level. Mimicking the US market, European market were also down to the tune of 1% yesterday evening. Today morning, all the key Asian indices are trading in red. GIFT Nifty, which is an early indicator of Indian equity market, is trading at levels of 19518, which clearly indicate that Indian equity markets are likely to open 100 point gap down today in the opening trade. In terms of fund flow, foreign institutional investor continue to remain seller, and yesterday they have sold equities worth approximately 1100 crore, whereas domestic institutional investor continue to pump the money in the equity market with positive flow to the tune of 740 crore. Overall, it seems that sentiments are bearish in the backdrop of rising Israel-Hamas conflict escalation. At the same time, the data from the US market doesn't look good, especially rising bond yield and better than expected economic growth outlook. So stock specific action will continue in the domestic equity market led by the ongoing results season. Now let us check which are the key companies which have declared the results yesterday, and that should be on our radar. So yesterday was a consumption day, so many companies like ITC, Hindustan Unilever, Nestle, Havells, Voltas, Metro Brand reported their quarterly results. So let us check one by one. Hindustan Unilever reported better than street estimate numbers. So it was purely a volume-led growth due to the price deflation we are seeing in the consumer basket. Revenue up by 3%, EBITDA up by 9%, and PAT up by 10%. EBITDA margin expanded to 24.3% against the street estimate of 23.2%. The company has reported profit of 2,657 crore. So we expect a positive reaction as far as Hindustan Unilever is concerned in medium to long term. Another large FMCG major ITC reported better than street estimate number. So we have seen normalized revenue, EBITDA and PAT up by 9%, 9.5% and 10% respectively. The major contributor to the top line and bottom line growth is cigarette division. So we all know that cigarette contributes almost 70-75% to the overall business of ITC, and we have seen cigarette volume growing by 6-7% against the street estimate of 5-6%. So that's a pretty strong set of number as far as tobacco division is concerned. FMCG other segment also reported a pretty decent set of number with EBITDA margin expanding by 150 basis point to 11% due to the favorable commodity price environment. Hotel business continued to report robust set of number because this was led by mainly G20 event where ITC Hotel was one of the hosts to that event. So we have seen revenue and EBIT going up by 21% and 50%. ITC is trading at a reasonable valuation, 25 times price to earning multiple, and we may see some positive reaction in ITC in medium to long term time frame. Nestle reported numbers during the market hours. So we have seen quarterly sales crossing 5,000 crore first time in its life. The overall revenue, EBITDA and PAT was up by 9.5%, 21% and 37% year over year. The company reported a PAT of 900 crore, which includes one-off positive inflow of rupees 100 crore. So if we net off that 100 crore, the normalized PAT of the Nestle India is 800 crore. What I feel, the stock reacted positively to the development of stock split of 10 share for every 1 share. So shareholder of Nestle will be getting 10 share of Nestle against the 1 share. The record date of stock split is not yet announced. So again, Nestle continue to trade at a very premium valuation. So going forward, we expect a kind of neutral to flattish reaction as far as Nestle stock price is concerned. Havells reported pretty decent set of number, quarter on quarter strong recovery. We have seen a margin expansion across all the segment. The growth was driven by switchgear and cables. LED business continued to witness price deflation, and hence there is a degrowth in LED business. Overall, a decent set of number from Havells, and we may see some neutral to positive reaction as far as Havells is concerned. Voltas, there was a one-off provision. If we take off that provision, we have seen Voltas reporting a kind of flattish YOY growth number, 100 crore PAT. Again, we are seeing a marginal improvement on sequential basis as far as Voltas business is concerned. Voltas continue to remain market leader in domestic AC segment with 19% market share. Although not a very optimistic number where one can expect a very strong set of positive reaction. So again, a neutral to marginal positive reaction can be seen in Voltas in short to medium term. Metro brand reported a mixed set of numbers. So we all know that Metro has acquired Cravitex as a new company, and that integration costs has led to the margin contraction as companies offloading the inventory at discount. So we have seen revenue and EBITDA going up by 17 and 16% year over year, whereas PAT was down by 13% year over year to 67 crore. Anyways, Metro is trading at 53 times FY25 price to earning multiple, which is fairly valued, and we expect a kind of flattish to neutral reaction in short to medium term in Metro brands. Some other companies which has reported a robust set of numbers. So I would like to put forth Equitas Small Finance Bank, 11,000 crore market cap, advances up by 32% year over year, deposit up by 42% year over year to 308 billion. NIM was flat at net interest margin flat at 9.3%. It was better than a street expectation. Net NPA down by 21 basis point Q on Q 2.9%. The bank has reported PAT of 198 crore. I think overall a pretty strong set of number, better than street expectation. The bank is trading at 1.7 time price to book. What we feel is that a fair value of Equitas Small Finance Bank is 110 plus on a per share basis, and stock may react positively in the trade today. Stainless Steel reported a stellar set of numbers. Sales volume up by 26% year over year. Revenue up by 12%. EBITDA up by 79%. And PAT up by 120% to 764 crore. EBITDA margin expanded to 12.6% as compared to 8% in the comparable quarter last year. Overall, a pretty strong set of numbers from Jindal Stainless Steel, and we may see some positive reaction in Jindal Stainless Steel in short to medium term. At the same time, yesterday we saw a pretty strong set of numbers from Ultratech. So Ultratech, the company has alluded to the fact that the benefit of low input cost material will be seen in the December quarter also, and hence at the same time demand environment continue to remain pretty robust. So we may continue to see a positive reaction in Ultratech in medium to long term. It's an indirect play on India's infrastructure and real estate growth story, and we may see a strong upgrade from a street as far as Ultratech is concerned. PVR Inox reported a pretty strong set of number, a record high ATP and spend per head, 200 crore profit led by the pretty strong content slate during the last quarter. At the same time, the multiplex chain operator is pretty optimistic on for the December quarter based on the strong movie pipeline led by the festive season. So one we may see some positive reaction in PVR Inox in a short to medium term. Again, today is a result heavy day, so we may see the companies like JSW Steel, Hindustan Zinc, Paytm, L&T Finance Holding, Poonawalla Fincorp, Kajaria Ceramics, Century Textile, Jammu Kashmir Bank. Sorry. So there are a whole lot of companies which are likely to report numbers today. So you may find the entire list of companies which are likely to declare result today and tomorrow in our morning report, which is uploaded in Telegram channel as well as on SBI Securities website. There is a small development on RVNL. RVNL has one order to the tune of 174 crore, kind of a very small order from a win for RVNL. IPO, from an IPO perspective, today is the last day for IRM Gas IPO. So we have discussed, we have already released the note on IPO, and the same has been uploaded on SBI Securities website, is available on Telegram channel. So yes, we have seen IPO was subscribed by 4.4 times on its second day yesterday, and today is the last day for this IPO. If somebody is a long-term investor, he can consider this IPO as an investment proposal. In terms of fund flow driven actionable, so we have seen Som Distilleries promoter Deepak Arora buying 20,000 shares from the open market on 19th of October. So that's the positive development as far as Som Distilleries is concerned. So if I have to conclude the today's discussion, so till date the result season has been in line with expectation or better than expectation. Companies from auto sector, FMCG, cement and banking are reporting in line or better than expected numbers. So we may see buying in all this sector on every dip. IT, large cap IT sector, I feel we have seen across the board downgrading of revenue growth for financial year 24. So hence large cap IT company may continue to trade sideways. Mid cap IT companies will be bought in by institution on every dip. So that's all for the day. Thank you for patiently listening to this podcast. Have a good day.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.